Hello, welcome to this Crypto Professor election special on Bitcoin, examining the Bitcoin price in 2020 with the Bitcoin price in 2016. Both years, 2020 and 2016, were election years for the United States, and also Bitcoin halving years, where the amount of Bitcoin that is mined by new miners is halved systematically every 4 years. In 2016, it was halved from 25 Bitcoin per block down to 12.5, and in 2020 from 12.5 down to 6.25. Both events have a squeeze effect on the price of Bitcoin and cause the price in the long term to appreciate. We can see this here. So this general trend that we have, this is a bullish trend for Bitcoin starting around the end of May 2016 and breaking out ultimately to $20,000 in 2017. 2016 was a breakout year for Bitcoin. It was the first year that Bitcoin really kind of gained public attention. It crossed the $1,000 barrier for the third time in its history, which the newspapers made a lot of fuss about. I should also mention that it was also a very negative year in terms of press for Bitcoin around the middle of the year. Both Jamie Dimon of JP Morgan and Warren Buffett of Berkshire Hathaway made very, very derogatory comments regarding Bitcoin around the end of the year, the August, September, October period, which is what this low level of activity in the chart represents. A lot of people were having fear, uncertainty, and doubt about the longevity of Bitcoin and its regulatory background due to those comments. So this is the halving effect, which almost fully corrects itself by the August. Then we have a period of consolidation. This is the US election, where we have a nice drop back down to test resistance. Then we have a movement up to test this level here, this resistance level. We have a triangle pattern form, a wedge, bullish wedge, and then a breakout to the upside, which is very powerful, all the way from $800 to over $1,000. This general direction, this chart pattern, this bullish tendency, is important. I'd like you to pay attention to that because we will return to that in time. But to understand the Bitcoin price properly, and not just look at the news articles that might be fueling speculator decisions during this period, I'd like to look at the dollar index. Now, the dollar index is a comparison of the US dollar against different fiat currencies in order to gauge how strong or weak the dollar is at any one point. You have currencies that are broken down into certain units and then compared against the US dollar by weight. For example, the Great British Pound makes up 11.9% of the US dollar index. Okay, this is a chart of the DXY, the US dollar index. Notice throughout most of 2016, 2015, we were stuck in this large trend channel where the price just oscillated between these two. Prior to this, we were on an uptrend. Then we met resistance at this level, finally breaking resistance conveniently and not at all convincingly at the end of 2016, which is when the US election was. So the US dollar was actually quite strong around the end of 2016, broke out to the upside, didn't last particularly long though, matched the price of Bitcoin for a little while where it broke out to the upside and was very, very powerful, but then ultimately started selling off and has been selling off consistently now all the way through until May 2018. If we look at the dollar index today, we will see that it's roughly the same as it was at the end of that bearish drop in December 2017. So on a long-term chart, there's actually a lot of headway to break this and descend down. So the US dollar, theoretically, if it breaks resistance here, could become extremely weak. And that's something to think about, particularly if you're hedging your US dollar against Bitcoin. Okay, so that's a little bit of understanding about the background of how we price Bitcoin against the US dollar. You can also look at it in terms of Great British Pound, which potentially is a little bit clearer. This is Cable, which is the most liquid dollar market in the world, so it gives you a really, really good indication, but obviously it's only centered on the Great British Pound against the US dollar. Once again, At the end of the year, we have this same pattern that Bitcoin formed, where it tested the resistance for the year, fell off, bounced at support, and then ultimately breaks through. With the Great British Pound, we actually see a very, very strong pattern for the US dollar over the course of 2017, 2018, 2019. So, and then we test resistance here, ultimately ascending all the way up to present day. And this movement here is what coronavirus caused, when the dollar rate went as high as 0.87 against the Great British Pound. So that's a very, very strong dollar there when everyone sold their assets back in March and kept cash in the form of dollars. Recently, though, we have been tailing off, and if we break this long-term line, which goes all the way back to June 2016, we could be in for a very bearish set of circumstances for the dollars, and that would match fundamental news of them quantitative easing significantly more over the course of the next couple of years due to coronavirus. So let's look at Bitcoin in 2020, and you'll notice that there is a lot more volatility. There's a lot more weight to the price, and that's because the number of exchanges trading Bitcoin has increased dramatically. You'll also notice that the price fluctuation has increased massively as well. Back in March, you could buy Bitcoin for around about $4,000. Today, the price is sitting at around about $14,000. So that's a $10,000 increase in the space of 7 or 8 months. But it hasn't just been plain sailing. We have had significant sell-offs and significant rallies. In particular, around July, we had a big rally, and August we had a sell-off. So this is fundamentally caused by the movements in the markets caused by the halving. So we had the halving in May 2020 where we hit this resistance level here. We bounced off this resistance level for a little while before correcting almost down to the bottom of the trend channel, then bouncing off significantly, then meeting it again, then bouncing down, and now meeting it again here. If we break here, we start a new area of development and growth for Bitcoin, which would be significant because this is a 3-year resistance level, going all the way back to 2017, the end of 2017, when Bitcoin climbed to its ultimate point of around about 19,700 US dollars. If we break this point here with the number of support and fundamental support that we have for Bitcoin, we could very easily see it go above this $19,600 point to start a new trajectory higher over the course of 2021. But notice the same bullish trajectory of Bitcoin. Yes, we had significant sells in that, but the overall price structure and the overall price action has been bullish because the number of people buying Bitcoin for fundamental reasons and not selling due to fear or uncertainty or doubt because their institutions has dramatically increased. I also want to pay attention to the news stories around Bitcoin in 2016. You'll notice that the Bitcoin value when Donald Trump was elected back in 2016 increased to 749. That, because of the price difference, is actually quite a large percentage move. The markets didn't like, overall, Donald Trump's election in general. The crypto market was actually one of the only markets that increased in value 10 days after Donald Trump was confirmed as the next US president. You'll also notice that there were quite a few negative stories in 2016 regarding Bitcoin. Bitcoin was a number of hacking scandals, in particular Bitfinex, which was huge, 119,000 Bitcoins stolen, equivalent of $72 million. You'll notice that that had quite a negative effect on Bitcoin. The price actually declined significantly and then managed to claw its way back up to 591 from 594 10 days prior. The negativity hasn't really been that prevalent with Bitcoin in 2020. Naturally, we had the sell-off back in March, where every single asset class, including gold, silver, currencies, stocks and shares, plummeted as a result of the liquidity crisis caused by coronavirus. People were getting margin called on their stocks and shares and had to find capital from somewhere to protect their positions. So they decided to sell most liquid assets and pool their collective money into the US dollar, which is why we saw on the DXY the US dollar climb to that ultimate peak back in March, because people were just selling anything and everything they could get their hands on. Looking at this, we notice that Bitcoin does lose half of its value, but then instantaneously gains around about $1,000 in 10 days. So there's a lot of people who are prepared to buy around the $4,000 level in order to build that liquidity up. And what has happened since is the price has just increased since then all the way here. So this is around about $4,000 here. The price has just increased on average over that time period. We've had hacks this year, $150 million, so double the amount that the Bitfinex hacking was back in 2016. But you'll notice a difference. The Bitcoin price actually increased in value as opposed to decreased over this period. So the fear that comes with a Bitcoin hack seems to have dissipated a little bit in the markets, and the markets are no longer really responding too much to hacks. That might be just a sign of maturity as more institutional investors get on board, and obviously institutional investors won't sell because of a hack, because they're managing their own Bitcoin themselves and they're responsible for their security. We've also had plenty of positive stories about Bitcoin. MicroStrategy bought 21,000 Bitcoin as a primary reserve asset for their company. We also had Square, the payment provider, buying $50 million of Bitcoin. And we've also had PayPal announce that they are streamlining their service for Bitcoin use in early 2021. You'll notice that these stories generally have a very positive effect on the price and match the consumer sentiment that Bitcoin is becoming a more stable and more secure asset for general investment. You'll notice that over the last 6 to 12 months, the number of negative stories and the number of people shunning Bitcoin has decreased dramatically. We have had some negative news stories as well about regulation and criminal charges, but you'll notice again the Bitcoin price increasing as a result 10 days later. This is BitMEX, which is one of the largest cryptocurrency exchanges in the world, facing criminal charges due to their money laundering KYC, Know Your Customer protocol. They don't really have a focus on KYC for trading of crypto assets, and the US government fell out of favor with them for this because they are quite a leading exchange and they do have quite a lot of volume, and the US wanted to ensure that they take their money laundering protocol seriously. So they decided to start criminal proceedings on the 1st of October, where the Bitcoin price increased nonetheless, and actually has increased a lot more since then. So this dramatic drop here caused by the fear of regulators getting involved in Bitcoin, and then a corresponding rally all the way up to here, where we're now at multi-year resistance, waiting to see whether we come back down to retest support or whether we break out for the long run and start to chase back this 19,700 US dollar price tag. I should also mention that Bitcoin is worth watching and analyzing because it makes up over 60% of the cryptocurrency market. You'll find that a lot of altcoins or alternative coins are actually negative at the moment because the Bitcoin price is so high and so bullish. You'll notice that Bitcoin is particularly prevalent in the positive assets that are appreciating at the moment because people want to own as much Bitcoin as possible because it looks like it's going to break out to the upside and start to chase that 19,700 price tag after breaking this resistance.